In this video, we are going to be analysing SNES. Now, it is a leading mover today. You can see it up over 100% as recording this video. If you go earlier in the day, it was up even more. But now, firstly, why is it up? So it did just have earnings. They weren't anything special. But what is weird is they have announced a reverse stock split. That within itself is kind of to be expected, considering the stocks was worth about 10 cents. But why is it spiking off that news is really the interesting thing, because if a stock's ever doing a reverse stock split when it's under $1, the only reason they do this is really just to be able to stay listed. If you know how the NASDAQ listing requirements are, they have to be above $1. So when they're fundamentally too weak to push above $1, there is only one solution if they want to stay listed, and that is a reverse stock split. So seeing it spike on this news is very weird, because overall that is a bearish thing. If a stock's having to do a reverse stock split, it's just showing how weak the company really is. You're seeing it move this much, very interesting. But really, this is most likely just going to provide a good short opportunity. And by that, I do kind of just mean I am more short biased on this stock. Really, any time a stock is under $1, I am more bearish on it, because if a stock's under $1, there is a reason for it. And what you tend to see in time, like we're seeing now, is a reverse stock split. And that's what you'll see if you prefer the small cap analysis, what we do on this channel. Then you will see multiple times we talk about the reverse stock split, because it's such a common thing on these weak stocks. And it is a 1 for 20, by the way, if you were interested. But anyway, what are going to be key levels? So 41 slash kind of 42 cents. Now this is going to be the key level we're paying attention to. When it comes into here, this is going to be obviously its first deviation on the 6 month, but this is going to be a very easy short location, because here we're coming a bit more overbought. No matter what, you really expect to see pullbacks coming into these levels, if not a reversal. Seem to be maybe doing it a few cents early, and again, sometimes that does happen, sometimes you miss it, but if it does go back up, that's going to be the level we're paying attention to. If we break that for any reason, we will be short bias again, coming into 49 cents, then going on to 59. 73 is another short level, with 78 kind of being as a zone, and then breaking through their final levels at 96, $1.06, and $1.35. Now, a lot of levels here. Do you need to pay attention to all of them? No. The only thing you ever need to pay attention to is where are we now and what are our closest levels. So our closest support is 23 cents. This is statistical mean on the 6 month. And our closest resistance is 41 cents. Again, our first resistance on the 6 month. So when you're within this range, they are the only two levels you need to focus on. If it comes to this level again, we're looking for that pullback, but if it is able to retest, break over, come and test it as a support, then we will temporarily be a bit more bullish on it, because we would expect to move to 49 cents. Now, if we fade back down to 23, again, more than likely we will continue to fade through that. And again, use it as a zone around 19 cents. We have the other statistical mean, but again, use it as a zone. But really, it wouldn't be a surprise to see us break down to that 52-week low at 8 cents. And then in time push down to 4 cents. And the reason I have such a low target on this, again, it's got a 52-week low of 8 cents. It's doing a reverse stock split, just another bearish sign. If it doesn't happen now, I don't know again why they're taking it as good news. But at least, the reverse stock split seems to be happening in a few days. So whenever that happens, again, be watching for the day, because what you tend to see is them fade on that day, because again, it is a bearish thing. Usually it's an easy trend trade. If you're able to get shares allocated to short, it's usually an easy short to be able to trade. But again, just start observing, see how they are. If you've never traded these reverse stock splits, again, wait for it to happen and just watch it. Don't need to trade it, just observe it. But really the key thing right now is if we push up, if you can get shares available to short, that would be my main focus. Playing it long bias, really not going to be any focus to me. But again, these are the levels to be focusing on, at least in my opinion. So if you are looking to trade SNES, these are the levels I would be paying attention to. But again, have your own trading strategy. Again, personally, I'm not going to be trading this stock. Even if it pushes up to 42, again, I don't really like small cap stocks as it is, but really if they're under $1, I don't even bother trading them. Don't like trading them at all, but that's just kind of want to put that out there. So again, I have no bias in that. I'm not going to be owning or shorting this stock. in any way. So again, these levels are just what I believe would be strong levels to be paying attention to, but I will not be trading off any of these levels or at any level. Anyway, I hope you enjoyed the video. If you did, why not drop a like and subscribe and check out one of these 2 analysis videos.